Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. We are back with a great friend of the channel, Mr. Dion from Dion Talk. How you doing, sir?
Howdy, Mike. Doing great. Ready for round three.
So I don't know if you've heard, but the stock market's crashing, crypto's crashing, the world's coming to an end. Even Meet Kevin is selling his entire $20 million portfolio and going negative. So the world's ending, I guess. How's your real estate portfolio?
I like the way you said it. I don't know if you've heard.
Yeah, exactly.
Because it doesn't matter
It does.
to me. So I don't want to see people lose money. I don't want to see people suffer massive losses. And when we see an over 50% drop in Bitcoin, like we did this week, a 50% loss means that we have to see a 100% gain to get back to where we were. So it's not like a 50% brings us back up to where we were. There are people that are losing a ton of money, especially if they don't have that long term, the long game, looking 10, 15 years down the road for that money. At some point, a large enough stock loss will reduce the demand for people investing in real estate. So I think it could impact real estate. That loss has to be massive, though, because it also means people are pulling money out of stocks and they're going to be looking for an asset class to put it into. So in the short term, I think it's going to increase demand. But with real losses over enough time, we're going to have less investors in that space. So I kind of watch it from a distance.
Yeah.
I kind of sit back and think, I'm glad I didn't choose those asset classes. And I'm sure there were people that thought in 2008, when real estate crashed, they were thinking, I'm glad I didn't choose that asset class.
Sure.
But in 2008, I went into this asset class because in the biggest crash that we've seen in my lifespan of real estate, buy and hold investors did really well because rents went up. So it's an asset class that to me is a hedge against inflation. It's not proof, resistant to a recession, resistant to a crash. So the numbers I like is if you have a 10% drop in an asset class, we call that a correction, right? And so if you lose $10,000 on a $100,000 asset, they call it a correction. I call that sucks.
That's a technical term, folks.
A technical term. If you lose 20%, we call it a crash, right? So we're seeing 50% in at least one crypto. And then stocks followed. And Meet Kevin even says it. He said it's almost like this crypto coin predicts what's going to happen in stocks. And he put the charts overlaying, and above my head, it's not my asset class. I'm not the stock or crypto investor. So I'm really watching to see how it's going to impact the asset class I do invest in.
Yeah. So there's a couple of things. I think this is a great conversation. So this is very similar to the .com crash, just different companies, different things, right? Coin has 4 words, com had 3 words, or 3 letters, sorry. First and foremost, when the market's going up, it is so addictive. It just drags people off the sidelines. And in this last 2 years, the government gave people money that they didn't need in some cases. So what else are you going to do? Let's invest in this meme stock, GameStop, AMC, Dogecoin, which has no freaking development team and makes a 5 billion new coin. I mean, what are you guys thinking? And everybody else was doing it. And then you get these social media, and then you get these athletes, and you get these freaking entertainers going, hey, do my coin, do this, do this. It's addictive. And then the rug gets pulled, reality sets in, and a lot of retail investors get smoked. I was smoked. I lost 80% of my position and had to go do something else. Unfortunately, a lot of people won't do something else. They'll either A, stay in because AMC or whatever, GameStop will be a $400 stock again. No, it won't. At least not anytime soon. And so they have dead money, and they're going to hold and diamond hand it and all this nonsense, which is just gigantic opportunity cost. I say this as an experienced investor. I did the math for you yesterday or the day before. The stock that I was in at the time was Cisco Systems. It traded at a peak of $74 or something in March of 2000. It still hasn't hit $74 21 or 22 years later. What are these people thinking? If I had not moved out of Cisco, taken my little $40,000 stake that I had left and put it in real estate, I'd still be working. And Cisco wouldn't be back to it. It's when the retail gets sucked into and it happens in real estate, flipping. I fear Airbnb. I fear all these other, I fear bigger is better syndications. Anytime people perceive easy and the masses are coming, I freaking run the other way. It is frightening what I see going on. So unfortunately, when the masses run, it eventually breaks, and then there's pain, pain, pain.
I mentioned it earlier in one of the videos that if your asset class's value is based on the demand for that asset class, it's why people feel attacked when I say something as simple as, I don't want to invest in Bitcoin.
Mm-hmm.
I don't tell other people you shouldn't invest in Bitcoin. I do say I would keep it a smaller portion because of the risk, but I'm not saying don't invest in it. Have that 1 to 5% that you put into something like individual stocks or crypto, but the demand sets the value.
Yep.
And when you have a demand like Dogecoin, Amazon did really well. And a lot of people say, if you bought $1,000 worth of Amazon and magically knew to just never sell when it increased hundreds of percents, right? And you would have this much value now. So who would hold it that long as it increased that much?
Nobody.
And the same month, I was doing some research for a video the other day, the same month that Amazon was formed, 237 .com businesses were formed that month. 3 are still in existence. So, and it's hard to find that data. So I want to get it narrowed down before I put that video together, but it's how many coins are going to be created that will drop to 0 or stay where it's at, or have your wallet stolen because it's a technology most people over 40 don't understand on how to buy crypto. That's one of the reasons why people under a certain age are more likely to have crypto. And it's like 3% of people over 40 own crypto. So there's all kinds of risk associated with that, how the tech works, how easy it is to replace. The .com problem was we have a business we're going to put online. A better business pops up next to it, and that first business disappears. The same thing can happen with coin. It would take the timeline for enough new builds to happen in a rental area for rents to drop would take years, and you would have the arc of time to see what was happening. So the long time horizon for a concern with rental properties. And yes, there are times where if you buy in an area where, let's say, car manufacturers are, and all car manufacturers move away, that market can drop. But if you buy in a place that has several economic drivers and you diversify your tenants by having some military, some Section 8, some working or retired, we can protect the asset class to where a catastrophic series of events has to happen for us to actually lose money. Whereas if you're in individual stocks or crypto and we're seeing the crash like we are now, which is a soft word, it's a bloodbath. If it's that far, it's bloodbath. I don't like to see other people suffer.
It hurts. But how do we learn not to touch a hot stove? Sometimes you got to touch a hot stove. And I hope people take this opportunity to learn. I think there's a couple of things. Again, my story, don't ever go on margin, right? Margin can amplify returns without question. It all can eat you alive very, very quickly. I mean, margin will eat you alive faster than you know, and you could be washed out with the brokerage can sell your position without you even knowing, right? They'll say, oh, sorry, your account's now 0. Good luck. Start over. Another thing is emotions. I happen to know myself, and I'm an emotional investor. I was kept awake at night. I'm sure there's lots of people listening that are being kept awake at night. That is a bad sign. Life is hard enough. I now believe your investments should never keep you awake. If your investments cause you 1 hour of less sleep, you have a problem. Your life is more difficult enough. And then finally, the reason that real estate works, especially residential real estate, is once the loan is in service and you're paying it, it can fall 80% and the bank can't foreclose. They can't take it back. It's, as long as you're making the payment. And again, rents went up. My portfolio was whacked in the Great Recession. I had residential debt, didn't matter. So again, lots of stuff there. But I don't like to see people lose money. But at some point you were gambling. If you were gambling and you called yourself an investor, you deserve to lose, my opinion.
And the challenge with making this video and putting this content out there is, if I say, I don't want to invest in stocks, it's not really my thing. People who invest in stocks will say, nice, less competition.
Yeah.
If I say, I'm an investor, not an entrepreneur, and I don't want to start and grow a business, people who run small businesses around me think, nice, less competition. If I hint or intimate in any way, I don't really think I'm going to buy crypto, it triggers people who invest in crypto because demand sets value.
Yeah.
And if they can't convince other people, that's why do you think there are hundreds of thousands of fake Facebook accounts of a very attractive person who's a crypto or something expert that reaches out with a bot program that says, have you heard the news? Here's the whatever pitch it is, because increasing demand is actually increasing their value.
Yeah.
And so when you make a video where you say, it really sucks that they're investing in crypto because factually, Bitcoin lost over 50% of its value in less than 7 days. The anger, the comments down below of, you just don't understand crypto and you shouldn't talk about an asset class you don't know. Well, right, because I'm not increasing demand in the asset that you need demand for there to be value in.
Yeah.
I get it.
I get it. Yeah. Man, it's a lot of fun. How can people find you, Dion?
Right here on YouTube, Dion Talk Financial Freedom. Feel free to come and attack me about why I don't invest in crypto.
And if you attack him on my channel, I'll just delete the comment. So I won't let you attack my friends. Thanks. Take care, Dion.
Ciao.